Fastly stock reports earnings on October 28th, and this is a stock that has skyrocketed from the bottoms of when the pandemic was getting started. And at a peak, it had really more than tenfolded your investment. Now, people are concerned that the stock has had a very lofty valuation, which is part of the reason why it's dropped off so much over the past few weeks. Combine that with Fastly lowering their revenue guidance, and you don't really have a good recipe here. Now, some people are thinking that Fastly has gone so far down that maybe the worst is over, where the market has already reacted to what's going to be lower guidance, and it may not be so bad. But in this video, I'm going to share some of the different scenarios and overall how I am playing Fastly stock going into earnings. Now, if you do want more videos like this, make sure you subscribe. I do talk about a lot of stocks here. I recently covered Etsy and Pinterest and what to do there on the way to earnings. So when it comes to Fastly, we have a company with a lot of potential, but just is priced very high relative to the other competitors. So one of the things to also think about is Limelight Networks. That was a stock that I've liked, and it definitely had better valuations than Fastly, but the company Limelight got hit because they didn't grow at a fast enough pace. And this is important for Fastly investors because you want to get an idea of how other companies in the sector are performing. It's like how if you invest in an airline company, you're going to pay attention to how all the airline companies perform, so you have a better idea of, well, how is your airline stock going to perform? So Limelight didn't do too well during the earnings report, and it dropped off significantly. Fastly has already had a lot of the drop off, so some people may think that the worst is over. However, Fastly still has, relatively speaking, a very high valuation, even though it's dropped off almost 50%. And with revenue guidance being lowered as a big concern, that could spoof even more people. So one of the things to pay attention to is one of Fastly's competitors actually reports earnings the day before. So Fastly reports earnings on October 28th. Their competitor reports their earnings on October 27th. If their competitor has a really big drop or they don't grow as quickly as people anticipated, you could take this as a sign for this is what's happening to the sector at large. And Fastly has kind of prepared people for a bit of deceleration just based on the lowered guidance. So the way I'm playing Fastly stock, I'm definitely bearish on this. I am a long-term shareholder because I do feel like this stock has a lot of potential to run if you hold on to it for years. If you look at a stock like Shopify, there are a few times where it's gone down 20%, 30%, even more than that in some cases, as it was growing to what it currently is now. So I'm definitely long-term on Fastly. I'm not abandoning ship, selling all my shares, or doing anything like that. I have trimmed my position a little bit going into earnings, but not abandoning the ship. Regarding options, because this is how I like to approach earnings, because you can protect yourself from downside, you can capitalize on upside even more with options than so with the actual shares. So the way I'm approaching Fastly is I bought 2 puts. One of the puts is protective. The other put is just extra gravy because I don't have 200 shares of Fastly. So if the stock goes down, those puts will significantly increase in value and end with a net even position because I have 2 puts that are very close to the current price of the stock. The stock going down in the short term would actually be very good for the setup I currently have. I also have sold a covered call, and it's a little further out at the 92 strike price. So if Fastly stock rises above $92, then I will have to sell my 100 shares at $92 a piece. And I didn't make too much money from this, just around $45 was the premium I made from that. But in stocks, you definitely go after any amount of return that you feel like you can get. You assess the risks and you figure out if this makes sense for you. In this case, I felt like it made sense for me. So I will be paying attention to what their competitor reports for earnings. If those earnings are good. I might buy a FSLY call a little lower than the $92 strike price for my covered call, just to lock in some gains in the event that FSLY skyrockets due to, it's not going to be incredible earnings. It's going to be more of good enough earnings. That's my overall prediction going into this. I did have a call that I bought for FSLY earlier today to create this similar hedging scenario, but I got out of the call very quickly because I do not feel like at the moment FSLY is going to have a big earnings day. So again, I'm a big advocate for, if you like the company, if you like the long-term prospects, or maybe it's a little bit too juicy in the price, I would still hold on to it. And that is what I'm doing. I am just preparing myself where if the earnings do take a downturn, I have the puts to compensate for the lost value in the stock. This is something I did right before FSLY lowered their revenue guidance, and that saves me from losing a lot of extra money. Overall, it was a net loss in that scenario because I only bought one put, but it did save me from significant downside compared to what it had been without me buying the put. So I'm not sure where you guys are with FSLY stock. So let me know in the comments. Do you own shares? Are you nervous about earnings? Are you feeling like a rebound is on the way? What are your thoughts on this stock? I'd love to hear from you guys. Smash the like button, subscribe if you have not already, and I'll see you guys in the next one.